Okay, so the last chapter in the textbook is financial statement analysis. And you really can't analyze financial statements without the knowledge that you just gained from chapters 1 to 10. So it's always saved for the last chapter in whatever accounting class you're going to take. You may see this again in managerial accounting, just a heads up. But we're going to focus specifically on analyzing the financial statements as a whole versus looking at those ratios that they're talking about in this chapter, because if you've noticed, the ratios have been in every single chapter and you've been working on them throughout the semester. So what you're seeing in the ratios in this chapter is no different from what you've already seen before. For the first topic, before I get into it, if you would like to connect on LinkedIn, which you all should be a part of already, I will give you 10 points of extra credit. So send me a connection request on LinkedIn. Lauren B. Wade, CPA is my name there. And I'll receive the connection request and I'll give you 10 points of extra credit. It's basically social media and getting to know different professionals. So it's really good to start building your network, your professional network now, and adding your teachers, adding your classmates as connections on LinkedIn is going to be helpful. If you have questions on it, let me know. If you don't have an account yet, it's free to start one. And all I ask is that you include that you're a student, the school that you attend. So if it's not always San Diego Mesa College, that's fine. But you may need to say that you're a student at San Diego Mesa College or within the district in order to connect with me. And then also any work experience, if you have any, maybe include that as well. If you don't have any, don't worry. It's not a big deal. And you're more than welcome to add a picture too. I think it's helpful to have a good professional picture in there. Questions on that? Okay. For the first topic we're going to talk about is the horizontal analysis. Basically, what we're looking at is trends, year-over-year trends for a company. So how are they doing compared to last year or the last 2 years? If you've noticed in the financial statements that we've looked at, they're all comparative. The income statement for a publicly traded company is presenting 3 years. For a privately held business, we're presenting at least 2 years. The most recent year, followed by the most recent prior year. So we're going to look at a company whose current year end is in 2020. So we're just going to assume that it was September 30th, 2020. And we're comparing it to their September 30th, 2019 information. With the horizontal analysis, we're always comparing the current year to our oldest year presented, the base year. So in this case, our base year is going to be 2019 because it's the oldest year presented here. First thing that we do with a horizontal analysis is that we calculate the dollar change year over year. So did revenue increase or decrease? Cost of goods sold, did it increase or decrease, and by how much? So we're going to go through and populate column C. And we'll do the first two together, and then I'll have you guys do the rest of them as practice. So total revenues are $1,007,000 in 2020 versus $917 in 2019. Did they increase or decrease?
Increase.
Increase, so it's going to be a positive number. By how much?
$90,000.
$90,000. So since it was an increase year over year, it's a positive 90,000. Cost of goods sold, you would assume, or you can make that assumption that if sales revenue increased, then you should naturally see an increase in cost of goods sold, roughly by the same percentage increase that you see in total revenue, unless other information is provided. So cost of goods sold went from 408,750 to 477. It did increase. How much did it increase by?
68,250.
68,250. So I'm going to pause the recording here and I'm going to let you finish up the rest of those numbers. Okay. For the net income, I had an error in my actual spreadsheet. So net income for 2020 is 114. That's the number you're going to use.
Yes.
Okay. For selling and general expenses, it went from 265 to 287 year over year. So did it increase or decrease?
Increased.
Increased, and what was the dollar change?
22,000.
$22,000 increase. Interest expense went from 13,500 to 23,500. What do you think happened?
Increased by 10,000.
It's an increase by 10,000, but what caused that increase? What would cause interest expense to increase? More than likely.
Borrowing.
Borrowing. They probably had some additional financing they took out. So you would look to see if they have additional notes payable or bonds payable in their balance sheet. Income tax expense went from 84,650 to 105,500. An increase of
2550.
20,000.
850.
850. Total expenses, since all of our expenses went up, right? You're expecting your total expenses to also increase, which they did. They went from 77,190. I can't say that right now. Sorry. To 893.
Yes, 121,100.
121,100 increase. And net income went from 145,100 to 114,000, meaning that we saw a greater increase in their expenses than we saw in their revenue. Right? That's how net income decreased year over year. So we're going to show it as a negative what?
31,100.
31,100. The dollar change doesn't really tell us much. We don't know if it's a good dollar change or a bad dollar change, or in relation to the other line items that we have, how it changed, to really make any assessment, which is why we go through the process of calculating a percentage change year over year. So we're taking the total dollar change for each line item divided by the base year to figure out how much each of these items either increased or decreased. As an auditor, this is one of the first things we do during our planning phase, and we're taking their prior year compared to their preliminary numbers, and then we're making a kind of educated guesses as to what we expect to happen, so our expectations. And then if they meet our expectations, we're not going to focus so much on those during planning, but if they don't meet our expectations, then we're going to start asking questions and maybe digging a little bit further into it. This is how we find errors sometimes, or just figure out where we need to focus our audit on for the year. So I know that most of you are not accounting majors, or at least maybe not at this point, but maybe in the future. But why do you need to understand what these changes are and what relation these accounts have to these other accounts? Because as an auditor, we don't go to finance to ask them questions. We go to the individuals that know the answers, which is every other department. Because you guys are on the floor, you know what's going on day to day in your department. So I want you to be prepared to know how to answer these questions. We know that revenue increased, right? So we're going to see a percentage increase. We're going to take the dollar change, which is 90,000, divided by the base year, which is 917,000 in revenue to get our percent change. How much did revenue increase by?
9.8%.
9.8%. So roughly 10%. If revenue increases by roughly 10%, I would be expecting cost of goods sold to increase by roughly the same percentage. Unless I know that they had either a decrease in the cost basis of their goods or an increase in the cost basis of their goods. Or perhaps if I know that they had excessive damaged items that they had to flush through cost of goods sold. But my assumption would be, my expectation would be a similar increase in cost of goods sold unless I know of other information outside of that. Because I know that the same number of units are showing for cost of goods sold as total revenue. Remember, total revenue is calculated by taking the selling price per unit times the number of units sold. Cost of goods sold is the number of units sold times the cost basis per unit. For cost of goods sold, the dollar change was 68,250 divided by the base value, which is 408,750. How much did cost of goods sold increase or decrease?
Roughly by 16.7%.
16.7%. So would my expectation have been met?
No,
No.
that's quite a bit higher.
It's substantially higher than my expectation was. So I would want to investigate further. I would ask some questions. What happened to cost of goods sold? Maybe there was an error. But my expectation from my client would be for them to tell me that their costs went up and they weren't able to pass them off to their buyers. Meaning that they weren't able to increase their selling price, but they saw an increase in their cost basis. Any other answer would probably lead us to more test work. For the rest of them, I want you to go through and calculate the percent change. And then we'll come back as a class. So for selling and admin expenses or selling and general expenses, 22,000 was the dollar increase. You divided it by 265,000, which is the prior year. And what percentage increase did you see?
8.3%.
8.3%. So it's roughly what we saw for our increase in revenue, which is pretty good. They controlled some of their costs there. For interest expense, you're going to see a huge percentage increase, right?
74%.
So 10,000 divided by 13,500, 74.1%
1%.
increase. So it's clear that they took on some additional borrowing. For income tax expense, you took 20,850 divided by 84,650.
25%.
24.6%. Because I believe your homework is going to want you to have that rounding to the nearest. One decimal out. For total expenses, 121,100 divided by 771,900 gives you an increase of
15.7.
15.7%. And we knew that our expenses increased by more than our increase in revenue already because our net income went down.
Mhm.
So because we have a decrease in net income as a dollar change, we're going to show our percentage change as a decrease, brackets. How much did it decrease by?
21.4.
21.4%. So if you know that you've done the calculation correctly and it's saying that it's incorrect, it's likely just because you forgot that it's a negative number. You need to put brackets around it or put a negative sign in there so it turns into brackets. Horizontal analysis is very helpful for those that want to invest, to see the trend year over year within the same company. It's not that difficult to do, is it?
No.
Questions? Do you want to take a quick 5-minute break?
Yes, please.
Okay. Come back by 10:48. Let's just say 10:50.
Okay.
So the horizontal analysis, we're comparing the same company year over year and looking at trends. For the vertical analysis, it's allowing us to compare companies of different sizes or compare year over year of different size revenue. So they may have been doing better in one year than in prior year. And what we're doing is we're converting all of the numbers within one of the statements for the same year into a percentage. So we're taking each line item in either the income statement or the balance sheet, and we're dividing each line item into a base. For the income statement, that base is total revenue or sales revenue. So it could be net sales revenue, total sales revenue, whatever the company calls sales. So it's the very top of the income statement. And we're going to divide every single number in the income statement into total revenue. So we're figuring out what percentage of total revenue each line item is. Obviously, total revenue is always going to be 100%, right? Because we're taking revenue, 67,390 divided by revenue, 67,390. So we're going to go through the income statement first. So I'll give you a moment to write out the income statement. And we're going to divide every number in the income statement by total revenue after you do that. So with the vertical analysis, you're going to take every number and divide it by total revenue for the income statement for the same year. But you can also remember that total revenue minus cost of revenue or cost of goods sold equals gross profit. So the percentages should also recompute the same. Sometimes because of rounding of numbers, it's slightly off, but it's just a way to double check your calculations. For cost of revenue, 45,725 as a percentage of revenue. So you're going to take 67,390. And what percentage of total revenue is cost of revenue?
$67.9.
67.9%. So they have a 30% markup basically. Gross profit as a percentage of total revenue. Remember, that's the gross profit percentage. We have shown this calculation before. You're going to use that one a lot in managerial accounting. 21,665 divided by 67,390. Gross profit as a percentage of total revenue is how much?
32.2 or 1, depending on how far you want to go to round it up.
Yeah, 32.1 is what I'll use. So 100 minus the 67.9 gives you that 32.1 as well. Selling and administrative expenses, 14,329. As a percentage of total revenue, 67,390. And selling and admin is roughly 21.3%.
3.
You guys want to do the rest of them on your own?
Yes.
Okay. Okay. So for other operating expenses, what percentage of total revenue are other operating expenses?
3.1%.
3.1%. Yep. And we know that total operating expenses is going to be the sum of these two amounts in percentage. So total operating expenses, 16,413 divided by total revenue,
24.4.
24.4. So do you see how these added together equals that 24.4? For operating income or loss, it's gross profit compared to our total operating expenses.
7.9%.
And it's 7.8% when you recompute it by taking 5,252 divided by 67,390. It's slightly off in rounding when you compare 32.1 to 24.4. And that's because these numbers at the end here are rounded from much larger numbers. For total other income or expenses, it's an expense because it's a positive number. 80 divided by 67,390. It's a very small percentage, obviously.
0.1.
0.1% of total revenue. Interest expense is also considered a non-operating expense, which is why it's below. Interest expense as a percentage of revenue was what?
1%.
1%. So not much long-term debt there. Income before taxes is 4,495, which would be operating income minus other expenses minus interest expense,
6.7%.
6.7%, correct. So if you see that, it does subtract down. Income tax expense, just because this company shows income tax expense as a negative, you're going to show the percentage as well as a negative. So income tax expense is a percentage of
2.3%.
2.3%.
What does the negative number mean?
Honestly, it's presentation. Most companies that I've seen don't do it.
Okay.
But usually when you see a negative, it's the opposite of what it's normal. So for instance, here, if you saw interest expense and then you have a bracket with revenue, it means that the interest revenue was greater than the interest expense. The net amount is revenue. And so it would
Yeah.
be shown as a negative because usually interest expense is higher than interest revenue for most companies.
Yeah, I'm just wondering why an income tax expense would be negative.
It's not usually.
Yeah.
For net income, obviously we're taking income before income tax, or sorry, income before taxes less income tax expense to get to that net income.
4.3%.
4.3%. So that rounding difference that we saw above kind of trickled down, which is why 6.7 minus the 2.3 doesn't compute back to that. For the balance sheet, you're going to do the same thing. So expect to see a horizontal analysis question on your final exam. Expect to see an income statement vertical analysis, and then also expect to see an income statement, I'm sorry, a balance sheet vertical analysis if you choose to take the final exam, because it is optional. Your highest 3 exams count. So a lot of people choose to just drop the final and not take it. It's just the last 2 the last 2 chapters. Totally up to you though. For the balance sheet, our base is always total assets. So remember in the balance sheet that we're showing that total assets equal total liabilities plus stockholders' equity. So we're going to have 2 100% in there. Total assets as a percentage of total assets is 100%. And then total liabilities and stockholders' equity as a percentage of total assets is also going to be 100%. So I will give you all a chance to write out the balance sheet. So in the balance sheet, we're going to divide every single number and figure out what percentage of total assets every single line item is. So cash and cash equivalents is 1712 divided by total assets, which is 43,705. So what percentage of total assets is cash and cash equivalents? Small percentage.
0.3.
It's
0.4.
so move the decimal, 3.9.
Got it.
Yep, so move that decimal over 2, right? So 3.9% is your total assets percentage. Net receivables is going to be a bit bigger, right? 6,153 divided by 43,705. Net receivables as a percentage of total assets.
14%.
Yep, 14.1. For inventory, it's even greater than net receivables, right? Because we have 7,596 divided by total assets of 43,705.
17.4.
Correct, 17.4%. So we'll just finish off the current assets portion and then I'll let you guys keep going. Other current assets is a smaller percentage, right? 1752 divided by 43,705. 4%.
Yeah.
And just like with the income statement for the vertical analysis, since we're adding up these amounts here to calculate total current assets, in theory, the percentages should add up as well. I believe it's off by a fraction of a percentage, but what does it calculate to? It's 17,213 as a percentage of total assets.
39.4.
39.4%. Okay, so finish off the two other asset amounts. Right, we have property, plant, and equipment net, other assets, and then go through the liabilities and stockholders' equity, and you're dividing every line item by that total assets. So property, plant, and equipment is going to be the largest, obviously, for assets. You have 25,493 divided by 43,705. So what percentage of total assets is property, plant, and equipment net?
58.3.
Yep, 58.3%. For other assets, it's a small percentage, smallest you're going to see up in my assets category. You calculated it at 2.3%, correct?
Yes.
So the sum of these three should equal 100% because total assets as a percentage of total assets will always equal 100%. For your liabilities and stockholders' equity, we're also dividing into total assets. So accounts payable as a percentage of total assets is going to equal
22.8.
22.8%. For notes payable, it's a small amount. It's only 119 divided by 43,705. So you come up with fraction of a percent, right? So it's 0.3%.
Yes.
And these two should add up because total current liabilities is the sum of these two values. Total current liabilities as a percentage of total assets equals
23%.
23.1%. Long-term debt is 15,607 divided by 43,705, and you calculate 35.7%.
7.
For other liabilities, 2,541 divided by 43,705. Smaller percentage is only
5.8.
Yep, 5.8%. And again, total liabilities is the sum of the total current liabilities plus long-term debt plus other liabilities. So the percentages should add down. There may be a slight rounding difference though. But total liabilities, 28,218 divided by 43,705 gives you a percentage of what?
64.6.
64.6%. For equity, we're doing the same thing. Common stock, 59 divided by 43,705, very small percentage. 0.1%.
Mm,
For additional paid in capital, 3,311 divided by 43,705. You came up with 7.6% of total assets.
yes.
Retained earnings, substantially higher, 12,698 divided by 43,705.
29%.
29%. So I'm just going to put 29.0 to be consistent. For other stockholders' equity, which is a negative 581, we're going to have
1.3%.
I got, for the previous one, I got 29.5. If you round it up, it's 29.1, sorry.
wait 1 second. 12,000.
It comes to be 0.2905.
Yeah, you're right. It should be 29.1.
And then same thing with total current liability.
So
I have it as 23%. I know you added it up, it comes to 23.1.
yeah, okay. So sometimes there are these rounding differences. What I'm using is the ones that they used in their MD&A. That's why.
Okay.
So because of these roundings, you do sometimes see those differences. So go with the one, the recompute computation. So you're saying this one for retained earnings, it does come out to 1. I agree with that. So I'll change it here.
Okay.
And then for total current liabilities, is that what you're saying?
Yeah, mine is just 23%. It was 0.00 something.
Divided by 3,705. Yeah, 23.0 is fine.
Okay.
And I'll change that one. As an auditor, when we had to recompute these and we had to change the little rounding, it's a pain. But not all the companies do it. They should. But I know in your homework, it's going to make you do it to the closest. So that's why I want to correct it here. For other stockholders' equity, it's going to be a negative, right?
Yeah.
So negative 1.3%.
Yes.
And then total stockholders' equity would add down or net down, if you will, because there's that negative. Total stockholders' equity is going to be
35.4.
sorry, 35.4, correct. And then total liabilities and stockholders' equity, we already know has to be 100%. If it wasn't 100%, that means their balance sheet doesn't balance, right?
Mm-hmm.
And that is all for the class. You are done with financial accounting, as long as you do all of your assignments. So
Is that
Professor
include
Wade,
all
is
four
the
chapters?
last test is gonna be
I'm going to tell you right now. So I don't have a traditional final in this class. It's not a comprehensive final, but if you think about it, everything that you've learned, you had to know information from the past. So in a way, it is kind of comprehensive, but it is only covering your last 2 chapters, chapter 10 and 12. So I take the highest of your your 3 highest exam scores to determine your overall course grade. So if you are satisfied with the first 3 exam scores, exam 1, 2, and 3, you don't have to take my final unless you want to. I do want you to finish the chapter 10 and 12 homework though. But otherwise, if you're satisfied with your first 3 exam scores, you are done with financial accounting as long as you finish off those last assignments. It's been a pleasure. I'm sorry I'm not going to be here for the spring semester for you guys, but you'll be in good hands. I will be back starting in the summer and in the fall. So if you want to hang around, or if you are hanging around and you want to take my managerial accounting class, I'll be back. I promise. I just won't be here for the spring.
Are
But
these the only 2 classes you teach, or you teach any other classes?
I teach principles of auditing, and it's once a year in the spring. So I'm not teaching it this year, so I'll be back next year. Yes, you can obviously use your second attempts. So the way the exams work is that it's the highest of the 2 attempts for each exam. So if you didn't take your second attempt, you're more than welcome to take the second attempt on different exams still. Thank you guys for being an amazing class, or classes, because there's a couple of you guys from different classes in here. And I will be having class next Monday and Wednesday for the exam review, but if you're not taking the exam, you don't
Okay.
have to come.
Okay.
And I'll be available on the last day, which is September 14th.
Okay.
If I don't see you again, have a great holiday season. Take care of yourself, and know how to keep in touch. Connect on
Take care.
LinkedIn,
Yeah.
and you have my email address forever. So if you guys need anything. Bye, guys.
Thank you.
Bye.
Thank you so
Bye.
much.
Thank you.
Bye.
Thank you so
Mr.
much.
Wei. Have a nice day.